Good morning, good afternoon, and good evening to those of you around the world. Welcome to the Trade the Chain Daily Crypto Update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, January 6th. It is the last day of the U.S. trading session, and we are approaching leading into the weekend for crypto, which has typically been very flat, not entirely volatile. We did see some nice Saturday motion and Friday evening motion last weekend. So hopefully we get a little bit of volatility this week. But in previous weeks, the volatility has been very weak and very tight trading ranges. So something to consider if you are looking to trade this weekend. DXY, which we are starting with today, as we've started with most of the week, as we can see, did break out into this morning and overnight. Only to be cut back down pretty sharply, very close to the lower end of the range. We, of course, have not tagged the lower end of the range, but typically that would be likely in this motion. I guess, 103.8 could act as support, but, we very may likely tag 103.4, 103.5 before the market closes for the weekend. So something to look out for there. And of course, if we do end up there, how do we open into Monday? Do we kind of tag support and have a little bit of weekend buying that brings us back up for potentially, a very similar range play next week? Something to consider in relation to equities as well as crypto. So for now, no signal for DXY, no confirmation of strength or weakness. We are back in the range. We are still waiting on a signal. So for equities, we can see, positive. What we did this morning was, zoomed higher just before unemployment numbers came out and dipped lower, and just give you a little bit of perspective on what happened. So yesterday, PMI came in a little bit higher. So the SP US Services PMI came in slightly higher than expected. This was this was predicted, and this was actual. So not very good yesterday, but unemployment numbers, coming in quite strong, and I think that was expected due to the ADP employment report. I mean, that was very strong, and likely the reason that we had bearishness yesterday. So I don't think anyone was really expecting too much strength in unemployment rate. And so the interesting thing is, in relation to why we're seeing bullishness today, and based on this data, is, to put it simply, the unemployment rate is going down, which is a bit of the opposite of what Jerome Powell wants. But basically, wage inflation also went down. So it was expected to come in at 0.4%. It came in lower, and that's positive for the long-term outlook of the economy, because if wage inflation is spiraling out of control, then we have a serious issue with unemployment decreasing. But since wage inflation is decreasing along with unemployment, that there's less of an issue with unemployment being a factor that will end up impacting inflation long term. So I don't think I'm describing this as best as possible, as I'm not a macroeconomist for a living, but basically the inflation as it pertains to earnings is decreased while the unemployment numbers are moving in a positive direction. But you said don't see charts. Let me, this should be showing charts. Is there, Jason, if you're still with me, are you still able to see? Actually, let me go ahead and check YouTube really quick. Apologies, everybody, for the quick pause. I just want to make sure that our video operations are going smoothly. Operations are going smoothly. Huh. That is very odd. You in the corner, blue screen, the rest of it. And the odd thing is I have the screen showing. Okay, so let's go ahead and stop the screen. Let's present, share screen 3. Let's double check YouTube. Let's double check YouTube. This should be expected due to the ADP. Okay, looks like we're back now. So apologies everybody for that slight issue. So let me go back and restart over. DXY broke out of the range, back in the range, no signal. I would not expect this to die immediately based on what I'm going to discuss next. I think it would be more likely than not that by Monday we are either above 103.45 or around that number. In relation to equities, we zoomed quite higher today, looking very strong, tagging that 39.05 resistance already. And context for equities is in relation to the unemployment rate as well as ISM services index. So very simplistically, these are the numbers that came out today: 3.5% unemployment, average hourly earnings at 0.3%. Unemployment is down, although that is not what the Fed wants. But the Fed does want inflation coming down, and wage inflation is coming down, which is a positive for the Fed. We also have ISM services index coming in much lower than expected, meaning inflation in the services sector is coming down, or at least seems to be coming down. So those are good signs for equities and why we are seeing this boost in equities and why we broke above this downtrend, which I'm going to now get rid of. I'm going to get rid of the SVP to make things a little bit more clean for you. We've been stuck in this eternal range since the 15th. We are now at the high end of the range that we broke in, I believe, after FOMC in December. I would say 39.10 is kind of, the peak resistance as it lines up with this wick up here. I have 39.05 as I like the clean body tags for true support, but very important to consider that this is likely top of line resistance, and you would need to have a strong break above 39.05 catch here to head higher. Now, if you cannot catch at 39.05, I would say the more likely catch would be 38.80, 38.75 for potential move higher, or then consolidation in the range for move higher or break lower, which would likely occur, into next week. So strength in equities. I think actually, observing the daily candle may be beneficial here as well, because yesterday the daily looked so horrible that we even went over the daily, which we typically don't zoom out too much. So remember, we said this was engulfing, but it was holding at support of 3,800, which was positive. There was no clear read on this formation whatsoever, but we do have a long body down with wicks unable to, either break through or meet previous price action. So could potentially be observed as a very ugly head and shoulders with the neckline breaking. So if the neckline is confirmed, which is about 38.75 to up to 38.90, then you have a good kind of precipice to move higher, which in that case, 39.85 would be resistance to begin with, as well as 40.40. And then, of course, 4100, which coincides with the higher levels that we traded in late November before the December FOMC. So preliminarily, equities look strong, but we are at resistance, and very much in the relation to our conversation yesterday, we need to see a clean break through that resistance level to call this or to expect continuation. But based on current strength, very strong body close into the weekend, that's plausible, but I'm not, going to make a bet until I see that confirmed break. And that'll probably either come Monday, as well as potential rejection. And of course, we still have the dollar for our major signal for where things are likely to break and drive long-term momentum. But a flat dollar is positive for risk, as we mentioned yesterday, because a flat dollar is basically, there is no counteraction to risk positivity or negativity when there is a flat US dollar. And in the sense that we got very positive data that the Fed looks at, that's why the market is moving euphoric. So positive data, dollar not messing with anything, market's moving higher. Looking at Bitcoin, bit of a wow. We're up back at 17K again and looking very strong. I will note that, we do have potential bearish divergence that we need to look out for. So that is when the price is moving higher, but RSI is moving lower. There is no confirmation for this yet, just something to look out for, as it will typically form at resistance, and we are at resistance. So looking at BTC, you either break above 17K and move higher, or you get rejected at 17K and move back to 16.9 or potentially lower. I will say this strength is strong, but or the strength of the markets does indicate potential momentum. But I would say the momentum is slightly waning at this point due to the typical formation of 3 green soldiers, 1, 2, 3. Could we have a massive spike come in? Certainly, but typically you'll see 3 green soldiers, nice little top wick formation, and then we'll end up consolidating, which I would expect consolidation to immediately start to form around 16.9, to where maybe we have a slight dip lower, strong spike higher, or we just start ping-ponging around here, form that range into the weekend before eventually moving higher or lower. So again, we're seeing some momentum here, and in relation to my bearishness yesterday, were we bearish? Was it a day to be bearish? I believe so. We dumped into the U.S. market open. So, very, very glad that we were correct there. And of course, very technically driven. Bitcoin caught at 16.7, which we mentioned as level of price broke beneath 16.8. So, we are still quite technically driven. And I would expect us to continue to be so. And we don't have, any insane catalysts. Of course, we do have reason for positivity in the market, but at the end of the day, is the Fed going to pivot? Is the Fed going to soften based on this one data point? Probably not. Maybe we wait until CPI comes in next week before we start really getting euphoric in relation to inflation and the Fed outlook. So maybe that's a bit of front running into this is positive, CPI should be positive next week. But in relation to the grand scheme of things, getting extremely long at this point without further confirmation, after busting to the top of the range, after RSI is oversold, after potential bearish divergence is forming, could we head higher? Yes. Is it a smart bet heading into the weekend? Probably not, but the market does like to prove me wrong. So again, break above 17K, zoom higher. Don't break above 17, or it cannot break above 17K. 16.9 is your next area. Looking at Ethereum, very similar. We mentioned in the Trade the Chain community, price would likely try and tag up to recent highs 1270, potentially up to 1280 if 1270 can hold. 1270 is trying to hold right now. We do have a double wick, but very, very fresh hourly. So if 1270 holds, then we are heading up to 1280, potentially break that, head higher. 1270 cannot hold very easily back to 1250, which is the previous daily close as well as previous support. Then we have 1230 right here. So in relation to Bitcoin, we also may have more bearish divergence forming. Of course, it's bucked the plausibility of it multiple times. So does not mean it is there, just means that it could be forming, and it is something to watch out for if you are bearish. If you see a candle that cannot get above 1280 and ends up closing, underneath, 1270, then that's a pretty good short opportunity based on bearish divergence. So I'm not telling you that I believe that shorting right now is the best move. I'm just saying we're at resistance. Longing through this would be typically a mistake in most trades, and it's probably better to wait for confirmation of the next move or a confirmed rejection back towards supports, which you could potentially long or look for another short, depending on where momentum lies. Now, the one thing that I will say that was different than yesterday is look at this spot buying. This was not here yesterday. This was not something that we were seeing. So, remember how we were saying that perps were outpacing spot? Well, they're pretty dead even today, which should give you indication that this move is a little bit for real. Now, if, one starts to sell off harder than the other, then we'll have to end up making a decision. But this does look very strong right now from the standpoint of how we've been looking at whether or not momentum is here to stay or it's likely to wither away. So this drive, does scare me to continue along. I would expect a little bit of consolidation around, either 17K or 16.9 for Bitcoin. But we'll have to continue to monitor this, and we know our triggers. If we can get above 17K and hover around it and confirm it on either the 15-minute or maybe the 15-minute, 30-minute hourly chart, we have a very positive momentum indicator for continuing higher. So due to this drive, also just final word, due to this drive into the weekend, and knowing that markets have still not closed yet, but will close soon, once US markets close after this drive, do we see consolidation and flatline into the weekend and trap a bunch of longs and shorts and just kind of wait for them to make a decision before we have volatility higher or lower to wash them out? That's completely positive. Or plausible. So just be weary after seeing these hardcore drives. And know the context of the trading situation that you're in. End of day is coming soon. End of the week. Could crypto flourish and have kind of a white swan event where we're having positivity randomly? Certainly. But, placing those bets and placing a lot of money behind those bets are few and far between. And I would recommend, preserving capital rather than risking too much, especially after we already got this boost from decent equity news. So good luck, happy trading. Talk to everybody on Monday. And of course, if you're not in the Trade the Chain community, you can get signed up at tradethechain.com for a 14-day free trial and interact with myself as well as all the other Trade the Chain representatives for assistance with trading markets, trading ideas, trade calls, all sorts of stuff. So good luck, happy trading. See everybody on Monday.